Welcome on board, Alok Tandon, CFO at Inox Leisure, joining in on the show right now. Alok, hi. One of the key positives in the results for you in the third quarter was the kind of strong footfall that you've seen, grown by about 11%, largely led by screen additions. But do you think this kind of strength can continue going forward as well?
Well, the screen addition trend will surely continue. Our endeavor is to open about 70 screens by the end of this financial year, and we are online for that. Our Q3 FY20 has been quite stellar. Our top line grew to 518 crores, which was a jump of 19%. Our EBITDA went to 108 crores, which is a jump of 26%. And PAT grew 40% to 51 crores. So saying that, yes, our endeavor is to ensure that all the numbers, all the metrics keep on increasing. And we continue with screen additions and bring the theatres closer to people.
Right, but do you retain the guidance of adding 70 screens in FY20? And what is the expectation, if you have any, for FY21? Would you be as aggressive?
Well, surely we want to be aggressive. For FY21, I would say that we should be opening anything between 80 to 90 screens. And going forward, even beyond FY21, our strike rate should be at least 80 screens every year.
Okay, over the past couple of years, Inox has significantly improved its footfall monetization. Will the benefits of this exercise continue?
As I just now said, endeavor is to increase everything, and our footfalls have surely gone up. We have increased Y on Y in every possible quarter, or in every quarter we have gone up. And this is for various reasons. Number one, more emphasis on getting in people inside. Content, yes, which is a very decisive element in our business, has done well. Q3, we had some great movies like Good News, we had Houseful 4, we had War, which was a great action movie. So all the movies contributed to great footfalls. Having said that, our endeavor is also to have non-film content being shown on our screen. And for that, we have tied up with various sporting leagues. We are showing the matches on screen. Inox, if you recollect, was one of the 3 chains worldwide to show the ICC World Cup live on our screens. We have shown various other tournaments. We have a lot of emphasis on music. Westlife was a group. Metallica we showed on our screens. So going forward, we want to show and have a lot of non-cinema content also. And not to forget the stand-up comedy which we did about a couple of weeks back, and which resulted in lots of people coming in and watching that show in our theatres.
Okay, and management has also highlighted F&B spending per head. Growth was driven largely by a volume increase rather than price increase. Do you expect to take a price hike as well?
Well, our endeavor is to price whether it's our food items or the ticket as per the paying propensity of the people and the cost structure of the property. Our endeavor is to sell more food per patron, to ensure that our guests do not stand in a line at the concession counter, and hence we want the point of sale to be where our guest is standing. We will push for more conversions. We will ensure that people are served where they are standing and they pay from wherever they are standing. And a price increase would be only depending if there's an inflation or a cost go up. That's the time when we look at the price increase. But our endeavor is to ensure that we see that people buy more food at the cinemas. The variety of food that we have today, we have in some of our properties 250 items on the menu. We have 12 different cuisines. So what we want is our guests to have food during the movie rather than before or after.
Right. You've also launched a loyalty program recently. Where is it? Where do things stand on that right now? And when is the expected benefit likely to pour in?
I'm proud to say that this is the country's only tier-based loyalty program where cinemas are concerned. And also in a short span of 2.5 months, we have got about 4 million guests who've enrolled in this loyalty program. So it benefits our guests not only by accruing points and redeeming them against food and tickets, but also a chance to meet various celebrities, chance to be a part of various guest star visits, to be there for premieres. So we are offering our guests experience which money can't buy, and that's something which we are very proud of. we will be able to communicate better with our guests when we know their likes, their dislikes, which type of movie they like, what's the genre they prefer, what do they prefer to eat. So that will build us or help us build a great relationship with our guests.
So what was the performance of advertising revenue and did slower economic activity have any impact on the same?
Our advertising in Q3 FY20 grew 3% Y-on-Y. That's mainly because we stood with our rates. We did not dilute our rates. There were a lot of companies who wanted us to advertise at lower rates. But we as a company said it's better to let go of a few campaigns and not reduce the rates. And I think that will help us in the long term.
Okay. Does the company also have plans to cut its ad realizations for better ad growth? And is company willing to sacrifice revenue from advertisers in the near term, from select advertisers?
Well, we will not dilute our rates. We have worked for the last couple of years to ensure that we have a healthy advertisement revenue backed by our advertising rates as well as minutes on screen. Going forward, we will ensure that the rates which we have put out in the market, we continue charging them. And as I said, in Q3, yes, we let go of one or two campaigns, but that was a short-term pain we faced. Most of them have come back to us in Q4. And I'm very hopeful that we will continue showing great advertisement growth.
Thank you for joining us and taking us through the quarter at Inox Leisure.